You know, there's this legendary trader, Ed Seykota, who once said something that really captures the heart of trading. Good trading boils down to three things: cutting losses, and cutting losses. Nail that, and you've got a shot. Now, at first, that might sound a little harsh or even repetitive, but that's the point. Because in trading, profits are obviously the goal, but survival? Survival is the real game. You can have the sharpest strategies, the best analysis, even the hottest tips. But if you don't protect your capital, you won't stick around long enough to actually enjoy any of it. That's why this chapter is all about risk management, your shield, your armor. Your survival kit in the financial markets. So, let's frame this right from the start. Risk isn't your enemy. Risk is simply the terrain we operate on. Think about it like hiking up a mountain. The cliffs, the loose rocks, the unpredictable weather, that's risk. You can't eliminate it. What you can do is prepare, gear up, and learn how to navigate. That's what risk management does for you. It transforms that wild terrain into something you can actually handle. It doesn't stop the storms from rolling in, but it does make sure you've got the right shelter when they hit. And John Maynard Keynes said it perfectly: the market can stay irrational longer than you can stay liquid. That's not just a witty one-liner. It's a brutal reality check. Because you might be absolutely right about where the market's heading, but if you overextend yourself and run out of cash before it gets there, you're out of the game. Risk management is how you buy yourself time, how you keep your seat at the table while the irrational winds blow through. So, how do we actually do this? Well, let's walk through the core building blocks of your risk management fortress. First up, position sizing. This is where most traders either make it or break it. Too big, and one loss wipes you out. Too small, and you never move the needle. Position sizing means matching your trade size to both your account and your emotional comfort. It's about betting smart, not letting your ego decide how much to throw into a single position. When you size your trades properly, you're giving yourself the flexibility to take multiple swings without fearing that one bad pitch is going to knock you out of the lead. Next, there's leverage. And here's the truth: leverage is a double-edged sword. Used wisely, it can amplify your returns. Used recklessly, it can blow up your account in the blink of an eye. Think of leverage like fire. It can cook your dinner, or it can burn down your house. The difference lies in control, in discipline, in knowing how much heat you can handle. That's why leverage wisely is a cornerstone principle of risk management. Then we've got the risk-reward ratio. This is your way of stacking the odds in your favor. You want to make sure that the potential reward on any trade is big enough to justify the risk you're taking. Because let's face it, not every trade will be a winner. But if your winners are consistently larger than your losers, you can be wrong more often than you're right and still come out ahead. That's the beauty of the math. Risk-reward is the silent engine that drives long-term profitability. Of course, none of this works without stop-loss orders. These are your safety nets, your emergency brakes. They're not just about capping your losses, they're about protecting your mental state. Because if you've ever sat there watching a losing trade spiral out of control, you know the emotional toll it takes. A stop-loss order is you saying, "I know my limit. I know where I'm getting out." And having that set in advance frees you to trade with clarity, not panic. Now, risk management isn't just about individual trades, it's about the bigger picture. That's where diversification comes in. Don't put all your chips on one square. Spread them out. It doesn't mean scatter yourself randomly, it means building a portfolio that's resilient. So if one market crashes or one strategy falters, you've got others still standing. Diversification is your insurance policy against the unknown. And right alongside diversification, you've got hedging. Hedging is like playing defense while you're on offense. It's finding ways to balance risks, maybe by holding positions that move in opposite directions, or by using instruments like options to offset potential losses. It's not glamorous, it doesn't sound exciting, but it's the kind of smart play that keeps you alive when markets turn nasty. There are also traps to avoid, and one of the biggest is chasing losses. We've all been there. You take a hit, and your gut reaction is to jump back in and make it back fast. But that's emotion talking, not logic. Chasing losses is how small dents turn into big holes. The discipline of risk management means knowing when to step back, take the loss, and live to fight another day. Another piece of the puzzle is limiting your exposure. Don't load up too heavily on a single trade, or even a single asset class. If too much of your capital is tied to one idea, you're not managing risk, you're gambling. By capping your exposure, you make sure no single outcome can dictate your fate, and here's one more habit of great traders: regularly reviewing your risk. Risk management isn't a set it and forget it kind of thing. Markets evolve, your account changes, your own psychology shifts. You've got to continuously assess and adapt. What worked for you when you were trading a small account might not work when your account has grown. Or what felt comfortable in calm markets might not fit in high volatility. Reviewing your risk practices is how you keep them relevant and effective. Finally, always stay prepared. Have a plan for different scenarios, especially the ugly ones. Ask yourself, what happens if the market gaps against me? What if volatility doubles overnight? What if my internet goes down in the middle of a trade? The time to answer those questions is before they happen. Not in the heat of the moment. Preparedness is what separates the amateurs from the professionals. So, here's the bottom line. When you've worked through this chapter, you're not just learning about risk in theory, you're mastering the practical skills to manage it in real time. You'll know how to size your positions intelligently, how to set stop losses with confidence, how to weigh risk and reward, how to diversify, hedge, and limit exposure. You'll have the discipline to avoid chasing losses, the foresight to review your strategies regularly, and the resilience to be prepared for whatever the market throws your way. And this isn't just about protection. It's about empowerment. Risk management gives you the freedom to trade boldly, because you know you've built the safety nets. It's what allows you to stay calm, stay disciplined, and stay in the game long enough to actually reap the rewards of your strategy. Van Tharp put it beautifully when he said, "Good rules let you sleep sound while the market rages." That's exactly what a solid risk plan gives you: peace of mind, even when the charts are going crazy. At the end of the day, strategies will come and go. Market conditions will shift. The latest hot indicators will flare up and burn out. But risk management, that's your anchor. It's the difference between being a tourist in the markets and being a trader who lasts. And now, without further ado, let's delve into tip 51, position sizing.
Thank you for listening to the Ultimate Trading Guide for Novice Traders, brought to you by bellsforex.com AudioWorks. We hope this chapter has given you the insights and confidence to start your trading journey with purpose and discipline. Stay curious, stay disciplined, and keep learning. Your trading success starts here. If you find value in this video, don't forget to like, subscribe, and turn on notifications so you never miss a trading tip. Your support helps us grow the channel and bring you more free trading education. And of course, share this with anyone who's starting their trading journey. It might be the nudge they need to trade smarter. You can visit bellsforex.com to access the complete guide for free, or grab your copy on Amazon in Kindle or paperback. Until next tip, trade smart and trade confidently. Happy trading!